Imagine you just paid $35,000 for a car. You think the hard part is over. You think you drove off the lot with a good deal. But 3 months later, you discover something shocking. The dealership made $3,000 on the financing alone. You never even knew that was possible. That is not a worst-case scenario. That happens every single day in car dealerships across the country, and most buyers never realize what happened until it is far too late. This is not about one bad apple. This is about a system that is built into the way car dealerships operate. It is designed to generate profit in places most buyers never think to look. And once you understand how it works, you will never look at a car deal the same way again. If you are planning to buy a car anytime soon, or if you have ever bought one, what I am about to share with you could save you thousands of dollars and prevent a lot of stress and regret. Before we go any further, I want you to understand something. The people selling you the car are not your friends. They are not there to help you find the best deal. They are professionals trained in a specific set of techniques that extract as much money from you as possible. That does not make them criminals. It makes them business people operating within a system that rewards them for maximizing profit on every transaction. Your job is to understand that system before you walk through the door. The first thing you need to know is that the price on the window is almost never the real price. Most dealerships add fees that they count on you not questioning. These fees go by different names. There are dealer preparation fees, document fees, filing fees, advertising fees, and sometimes even fees with no clear explanation at all. These charges can add hundreds or even thousands of dollars on top of the price you thought you agreed to. And here is the part that most people do not realize. Many of these fees are completely negotiable, or in some cases, they can be eliminated entirely. But the vast majority of buyers never push back because they do not know they can. There is something called dealer reserve, and this is where things get really interesting. When you finance a car, the dealership works with banks and lenders to arrange your loan. What you probably do not know is that the dealership can mark up the interest rate on your loan and keep the difference. That means, if you qualified for a rate of 6%, the dealer might tell the lender you are getting 8%. The extra 2% goes straight into their pocket. On a $30,000 loan over 5 years, that markup can cost you over $1,500 in extra interest. And the dealership never tells you this is happening. They do not ask your permission. They just do it because they know most people will not find out until years later, if ever. If you found this information useful so far, make sure you subscribe because this is exactly the kind of knowledge that protects your family from costly mistakes. There's a lot more coming that you do not want to miss. Now let us talk about something called spot delivery because this is one of the most dangerous traps in car buying. This is how it works. You find a car you love, you negotiate a price, you sign some papers, they hand you the keys and you drive home feeling great. But here is what nobody tells you. That sale is conditional. The dealership sent your financing application to a bank, but the bank has not actually approved the loan yet. What you drove away in is technically a temporary arrangement. Within days or weeks, the dealership may call you back and tell you the financing fell through. They will say you need to come back in and sign new papers. The new terms will be worse. The interest rate will be higher. The monthly payment will be bigger. And if you do not accept the new terms, you will have to give the car back. But by that point, you have already fallen in love with the car. You have probably traded in your old car and handed over the keys. You might have registered the new car in your name. You have emotionally committed to this purchase. The dealership knows this. They know that most people will accept whatever terms they offer rather than lose the car and deal with the hassle of starting over. That is exactly why they do it. This practice is called yo-yo financing, and it affects thousands of buyers every year. The dangerous part is that many people do not even realize what happened to them. They think they simply did not qualify for the original deal, when in reality, the dealership never had the financing confirmed in the first place. The add-ons are another major area where dealerships make enormous profits, and most buyers do not understand what they are actually buying. Extended warranties are pushed hard in the finance office. Service contracts, gap insurance, tire and wheel protection, key replacement programs, and theft protection packages are all presented as essential. Salespeople use phrases like "you will regret it if you do not have this coverage" or "this is the smartest investment you can make." They create a sense of urgency. They make it feel like saying no means taking an unreasonable risk. But here is the truth nobody tells you. Most of these products are dramatically overpriced, and many of them overlap with coverage you already have through your auto insurance policy or through warranties that came with the car. Gap insurance, for example, covers the difference between what you owe on the car and what it is worth if it is totaled. But many auto insurance policies already include gap coverage as an option, often for a flat fee of around $20 per year. The dealership might charge you $1,500 for the same coverage. That is not a typo. The same protection can cost 75 times more when you buy it at the dealership. Extended warranties work the same way. The dealership charges a premium price for coverage that you might rarely use, and when you do use it, they often make it difficult to get claims approved. The profit margins on these products are staggering, and that is why the finance manager pushes them so hard. They are not trying to protect you. They are trying to generate additional profit on a sale you already thought was complete. Something else that happens constantly is trade-in manipulation. You bring in your old car hoping to use it as leverage for a better deal. The salesperson seems impressed. They take your keys, disappear for a while, and come back with a number. It feels like a reasonable gesture. They make you feel like they are doing you a favor by taking your car off your hands. But what you do not see is what is really happening behind the scenes. The dealership knows exactly what your trade-in is worth. They know the market value. They know what they can sell it for at auction or on their lot. When they offer you a trade-in value, they are already factoring in how much profit they will make when they sell your car to someone else. So the trade-in value they offer you is not a gift. It is a carefully calculated number that still leaves room for significant profit. In many cases, the dealership will turn around and sell your trade-in for several $1,000s more than the value they credited you. You essentially gave them a car for far less than it was worth, and you did not even know it. This is why smart buyers always research their trade-in value independently before walking into a dealership. There are free resources that tell you exactly what your car is worth based on its make, model, condition, mileage, and local market conditions. When you know that number in advance, you can negotiate from a position of strength instead of trusting the dealership to be fair with you. Most of the time, they will not be. There's also a technique called payment packing, and this one is particularly deceptive. The salesperson asks you what monthly payment you can afford. That question sounds reasonable on the surface, but here is what they are doing with that information. They take your target payment and work backward to find a car and financing structure that fits that number, even if it means extending the loan term to 6 or 7 years, adding expensive add-ons, or inflating the purchase price. You end up paying far more than you should, but the monthly number looks manageable, so it feels like a good deal. The danger with payment packing is that you never actually know what you're paying for the car. You only know your monthly payment, and that is exactly what the dealership wants. When you focus only on the payment, you lose sight of the total cost, the interest you will pay over time, and the overall fairness of the deal. This technique works because people think in terms of what they can afford each month rather than what the car actually costs in total. The dealership exploits that tendency every single day. By the way, if you are just joining us, make sure to hit like and keep watching, because the most important information is still ahead. You do not want to miss the specific warning signs that tell you a dealership is trying to take advantage of you. Now let us talk about advertising manipulation, because this is where many buyers first get hooked. You see an advertisement that says something like 0% financing or $299 per month. That looks like an amazing deal. You call the dealership or walk in ready to take advantage of it. But what you quickly discover is that those offers come with conditions that were not mentioned in the ad. 0% financing might only be available to buyers with perfect credit who are financing for a very short term. $299 per month might be based on a lease structure with strict mileage limits and a large down payment at signing. The advertised number is technically true, but it applies to a very specific scenario that most buyers do not qualify for. And you arrive at the dealership, the salesperson will work to redirect you from the advertised offer to something that generates more profit for them. They might tell you the advertised deal ended, or that it does not apply to the model you want, or that you do not quite qualify. Then they will offer you an alternative that sounds good but costs much more. The advertised price becomes a bait-and switch tool, and most people fall for it because they do not know what other options they have or what the market actually looks like. Here is what you need to understand about the entire process. Every step of the car buying experience has been optimized to generate profit for the dealership. The salesperson who greets you has a script. The test drive is designed to create emotional attachment to the car. The negotiation is steered toward your monthly payment rather than the total price. The finance office is a final opportunity to add profitable products and services. Even the way the paperwork is presented is meant to overwhelm you and make you sign things without reading them carefully. This system is not accidental. It has been refined over decades by people who study buyer psychology for a living. They know exactly when to create urgency, when to offer sympathy, when to deflect questions, and when to close the deal. If you walk into a dealership without understanding how this system works, you are at a significant disadvantage. But if you understand it, you can protect yourself and make choices based on logic rather than emotion. One of the most powerful things you can do before buying a car is to get pre-approved financing from your own bank or credit union. This gives you a baseline interest rate and a maximum loan amount that you know is real. When the dealership offers you financing, you can compare it to your pre-approved offer. If their rate is higher, you can reject it. If their rate is lower, you can consider it. But without that pre-approval, you have no way to judge whether their offer is fair or inflated. You are basically trusting them to be honest with you, and that is not a bet you should take. Another critical step is to always read everything before you sign it. I know that sounds obvious, but most people sign multiple forms in the finance office without actually reading them. Dealerships count on this. There might be add-ons pre-checked on forms that you are signing. There might be terms buried in fine print that change the deal significantly. Take your time. Ask questions. If something does not make sense, do not sign until you understand it. It is your money and your signature, and you have every right to know exactly what you are agreeing to. Also, never be afraid to walk away. This is one of the most powerful tools you have in any negotiation. If the deal does not feel right, if the numbers do not add up, if the salesperson is pushing too hard, you can simply leave. There is no rule that says you have to buy a car today. There will always be other cars and other dealerships. Walking away signals that you are not desperate, and that changes the dynamic. Dealerships often improve their offers when they realize you are willing to leave. But only if you are actually willing to do it. Now let us discuss what you should do after you have bought the car, because the protection does not stop once you sign the papers. Review your paperwork carefully within the first few days. Check the numbers. Verify the interest rate. Confirm that any add-ons you agreed to are actually on the contract. If you discover something that was added without your consent, contact the dealership immediately and ask for a correction. Many states have cooling-off periods for certain types of purchases, so find out what your rights are in your specific situation. If you were charged for add-ons that you did not knowingly accept, or if the financing terms are different from what you were promised, you have options. You can contact the lender directly. You can file a complaint with your state attorney general or the Consumer Protection Agency. You can leave honest reviews that help other buyers avoid the same experience. The dealership might be able to resolve the issue quietly rather than face regulatory scrutiny or public embarrassment. One more thing that many buyers overlook is the importance of knowing your credit report inside and out before you start shopping for a car. Your credit score directly affects the interest rate you will be offered, and that affects the total cost of the car significantly. Check your credit report for errors. Dispute anything that looks wrong. Take steps to improve your score before you apply for financing if you have time. Even a 1% difference in your interest rate can mean hundreds or thousands of dollars over the life of the loan. That is time and money worth spending. If you know someone who is planning to buy a car soon, please share this video with them. What they do know. Know about dealership practices could cost them dearly, and this information is exactly the kind of knowledge that helps people make smarter decisions. Hit the share button and help protect someone you care about from making a mistake they will regret for years. Let me share one more example to make this real. Imagine you walk into a dealership and find a car you love. The sticker price is $28,000. You negotiate hard and feel proud when they agree to $25,500. That sounds like a solid win. But here is what you do not see. The dealership bought that car at auction for $19,000. They marked it up to $28,000 knowing they would negotiate down. Your $25,500 purchase price still gives them a profit of over $6,000. Plus, they added an $800 documentation fee and $1,200 in add-ons. Plus, they marked up your interest rate by 1.5%. Plus, they lowballed your trade-in by $2,000. By the time everything is accounted for, the dealership made over $10,000 on a transaction you thought was a great deal. That is what happens when buyers do not understand the system. The good news is that you can avoid all of this. You do not have to be a financial expert. You do not have to be aggressive or confrontational. You just have to understand what is happening and make your decisions accordingly. Get your financing in advance. Research the car and its market value. Know what your trade-in is worth. Read every document carefully. Ask about every fee and every charge. Do not focus only on the monthly payment. And never rush. A car is one of the largest purchases you will ever make. It deserves your time and your attention, not your urgency. The dealerships that use these techniques count on you being in a hurry, emotionally excited, and trusting. They count on you not asking questions because that is inconvenient or because you do not want to seem difficult. But you are not being difficult. You are being smart. You are protecting your family's financial future, and you have every right to do that with confidence and without apology. The information in this video is not meant to make you distrust every dealership or every salesperson. There are honest people in this industry who genuinely want to help you, but you cannot assume that everyone is honest. You have to verify, you have to question, you have to educate yourself before you hand over your money. That is not being paranoid. That is being prepared. That is the difference between driving away in a car you love and paying for it for years with regrets you never needed to have. If you take one thing away from this video, let it be this. The moment you stop being informed is the moment you become vulnerable. The moment you ask questions and push back is the moment you regain control. Knowledge is not just power in car buying. Knowledge is thousands of dollars in your pocket that you would otherwise never realize you were missing. So learn what you can, share what you know, and never walk into a dealership unprepared again. If this video helped you understand something you did not know before, please consider subscribing. These are the kinds of truths that more people need to hear, and every subscriber helps spread the word. Hit the like button if you found value in this, and let me know in the comments if you have ever experienced any of these situations yourself. Your story might help someone else avoid the same mistake. Thank you for watching, and remember, the best deal is always the one you fully understand.